Long-term insurers continue to surprise me, if I may say, in that we continue to see growth in very difficult economic circumstances. We don't have big economic growth rates, as you know. We're sitting at about 2%, and yet we continue to see growth in results of 20% return on assets and so on. So that's very surprising to start with. But having said that, we're starting to see reducing margins in that growth in the SA operations, and also reducing contribution from investment markets. So where we've relied on investment markets in the last 3 years to help us, that's starting to reduce. When you look at the future, you start to say, where is the growth going to come from? It can't continue to come from the economy that's shrinking. And investment markets are declining. So we've got to start diversifying the insurance business, start to look at new markets, new ways of doing things, and possibly new products if we want to remain relevant. I think moving in other territories brings difficulties. There are very different regulatory structures in those other countries, different capital requirements, different cultures. So there's a lot to learn there. And then also difficulties in exporting some of our skills. We've got to deal with the mobility issues, persuading people to move out of their comfort zones to other countries. So it's not all that easy. And then there's obviously competition from other people from Europe, other insurers who are also looking at those growth opportunities. So it's a lot to deal with. I think the growth still surprises me. I mean, there's a huge gap when you look at the growth that we see and our own growth in our economy. So that's surprising. It shows the amount of resilience that there is in this economy, and also innovation. I think we're a very strong insurance market with very high penetration levels compared to the rest of the world. So we need to keep that position.